There's a legendary corporation from the Netherlands that rewired the way money, state power, and global trade operate. It's roughly 4 centuries old, and at its peak, its valuation wasn't just high, it was almost absurd. People today point at Apple, Microsoft, Amazon, Nvidia, Saudi Aramco, and say, that's what power looks like. Stack their market caps together, and you still don't really touch what this Dutch machine was estimated to be worth at its height. We're talking about the Dutch East India Company, known in Dutch as the Verenigde Oostindische Compagnie, or VOC. This wasn't just a company that traded spices. It was a weapon. It was an operating system. It was the prototype for the modern corporation. And standing behind it, watching, protecting, and shaping its role, was a dynasty that learned to convert capital into political authority. The House of Orange. To see how this happened, we have to rewind. Go back to the late 16th century. In 1580, Spain effectively absorbed Portugal in what historians describe as a personal union under one monarch. Overnight, the Spanish crown gained command over Portuguese imperial infrastructure. Ports, garrisons, spice channels, slave routes, sugar plantations, and Asian trade posts. That meant huge stretches of Africa, Asia, and the Americas were coordinated under one royal head. For most of Europe, this was just another power shift on the chessboard. For the Dutch, it was an existential problem. The Dutch provinces at that time were fighting for independence from Spain, and suddenly, Spain had doubled its reach. The enemy now controlled Portuguese outposts in the Indian Ocean and Southeast Asia. The Dutch could no longer pretend this was only a land war in Europe. The battlefield had become global. The Dutch response was not, let's build a bigger army. They didn't have the demographics or the raw resources of Spain. They answered with something more radical. They built an organization that merged private capital, military force, logistical reach, and state legitimacy into one machine. That machine was formalized in 1602, when multiple competing Dutch trade ventures were consolidated under a single charter into what the world now calls the VOC. At first glance, it looked like another merchant enterprise. Ships sailing east, buying pepper, nutmeg, cloves, cinnamon, silk, porcelain, tea. But if you stopped at merchant company, you'd miss the whole point. The VOC was a corporation that behaved like a state. The Dutch Republic handed it a charter that basically said, you can negotiate treaties, build forts, raise private armies, occupy territory, administer colonies, and if necessary, use force to secure trade. Think about that for a second. This was not a king issuing royal orders to a vassal. This was a republic giving a board of directors permission to act like a sovereign. Now, that permission alone would already be wild, but the real breakthrough sits in how the VOC was financed. Before the VOC, you usually had small syndicates or partnership voyages where investors would fund a single trip. Money went in, a ship sailed, with luck the ship returned, everybody got paid, and then the partnership dissolved. The VOC did something that had never been done at that scale. It pooled capital permanently. In Amsterdam in 1602, the company opened subscriptions to the public. Ordinary citizens could buy shares, not just nobles, not just court insiders. The money didn't vanish after one voyage. It stayed in the company. That meant the VOC didn't have to constantly raise new taxes or beg creditors for each expedition. It had a standing pool of capital it could redeploy as needed. This one design decision changed world history. Because those shares existed, they had to be tracked. Because they were tracked, they could be transferred. Because they could be transferred, they could be traded. That led directly to the birth of the first modern stock exchange in Amsterdam. People didn't just invest. They actively traded VOC equity, and soon they were speculating on future prices, lending against positions, short selling, hedging, and doing what we would now call arbitrage. In other words, what we think of as normal financial market behavior today was stress-tested on VOC paper. And behind the financial innovation was a legal innovation just as important: limited liability. Investors in VOC could lose the money they put into shares, but they would not lose their houses, their tools, or their family assets if a ship sank or a branch office failed. That shield against total ruin encouraged much broader participation. It made risk investable for normal people. That idea is at the core of modern corporate law. But the VOC wasn't just a clever balance sheet. It was force. It had fleets. It had guns. It built forts. It carried soldiers. It signed treaties when convenient and ignored them when convenient. It moved like a sovereign empire, not like a private store. At points in the 17th century, it operated roughly 150 large merchant ships, maintained tens of thousands of employees, and kept a private army measured in the tens of thousands. This army was used to secure trade monopolies in key commodities. If local rulers resisted, the VOC didn't just walk away. It blockaded, crushed, or replaced them. Its main hub in Asia was Batavia. The company captured the city of Jayakarta in 1619, renamed it Batavia after an old Dutch tribal name, and turned it into a command center. That city is modern-day Jakarta. From there, Dutch governors ran a network that stretched across what is now Indonesia and far beyond. Java, the Banda Islands, the Moluccas, Ceylon, modern Sri Lanka, Bengal, the Persian Gulf, sometimes even touching Japan. They weren't just trading, they were administering. They collected tribute, set prices, enforced exclusive contracts, stationed troops, and even dispensed justice. Batavia became both a port and a capital. For about 300 years, it was the beating center of the VOC's Asian empire. You can still feel the mark of that period in Indonesian language, architecture, loanwords, cuisine, and city planning. And all of this ran on people. From the early 1600s into the mid-1700s, roughly 1 million men signed VOC contracts and departed Dutch ports for Asia. Not mythic explorers, not romanticized adventurers from a painting. Workers, sailors, clerks, accountants, translators, gunners, ship surgeons, carpenters, warehouse guards. They kept the forts standing, loaded cargo in spice ports, tallied bales of textiles in Bengal, negotiated with local rulers, and enforced VOC orders, sometimes at gunpoint. It is important to understand this because it tells us what the VOC really was. It was a multinational corporation long before anyone used that phrase. It had internal logistics, HR, legal, military, accounting, and strategy departments, and those departments operated across continents. Now, introduce another layer. The House of Orange. When people think old money or shadow power, they sometimes jump straight to names like Rothschild or Rockefeller. But long before those families rose, there was the House of Orange-Nassau in the Dutch Republic. Unlike the classic royal dynasties of France or Spain, the House of Orange did not sit on an undisputed throne. The Netherlands in this period was a republic dominated by merchant elites in cities like Amsterdam. The stadtholder from the House of Orange was a kind of executive and military leader, but his authority was constantly negotiated, challenged, and limited by local power brokers and by foreign pressure. The dynasty's position was always a little unstable. That instability pushed the House of Orange to adapt. Feudal tricks like, "I own the land, therefore I rule the people on it," were fading. The Netherlands was not a classic feudal kingdom anyway. Wealth was flowing through trade, shipping, finance, and colonial extraction. The Orange family understood that if it wanted to matter, it couldn't just claim bloodline. It had to plug into commerce. So they aligned themselves with the VOC, and later with the Dutch West India Company, which handled trade, colonization, and exploitation in the Atlantic world. They helped finance, protect, and politically legitimize these companies. They also benefited from them. Over time, members of the House of Orange held top ceremonial or supervisory roles connected to these chartered companies. In effect, instead of ruling a kingdom, they attached themselves to a corporate empire. This is where the model gets even more interesting. The Dutch Republic had merchants with money, but needed military cover and political cohesion. The House of Orange had lineage, armies, and diplomatic stature, but needed relevance in a merchant-led system. The VOC had global reach, but needed legal backing and financial stability. Each one solved problems for the others. The result was a new kind of power network, a republic plus a dynasty plus a corporation fused into something that could compete with giant monarchies like Habsburg Spain. And they were effective. The VOC didn't act like a passive traitor. In the Banda Islands, for example, VOC forces committed near total slaughter of the local population in order to lock down nutmeg production and enforce a Dutch monopoly. The company deported survivors, imported enslaved labor, and planted its own controlled system. In Ambon, VOC officials carried out arrests and executions of English and Japanese merchants after accusing them of plotting against a Dutch fort in what later became known as the Amboina case. In Batavia, in the 18th century, a violent massacre targeted ethnic Chinese residents, thousands of whom were killed. VOC policy included forced labor systems, especially in spice-producing regions, where local people were compelled to grow what the company demanded under brutal terms. Resistance was met with military suppression. Local rulers who resisted monopolies lost their positions, or their territories were carved up and placed under company control. We are not talking about polite competition here. We are talking about corporate colonial violence. So yes, the VOC pioneered modern corporate finance and global logistics. But it also pioneered something darker: the ability of a private profit-seeking entity to direct military force and reshape entire societies. That dual legacy is not a footnote. It is the core of the story. It tells us what kind of machine we are dealing with. Now, let's talk numbers and scale. Estimates vary, but even conservative attempts to translate VOC's peak valuation into modern money land in the trillions of dollars. At one point in the early 18th century, the market value of VOC shares was on a level that rivals or exceeds the combined valuations of the largest companies on Earth today. More than that, VOC profits and dividends built fortunes that fed directly back into the Dutch Republic's financial system. Its reach made Amsterdam the financial center of the 17th century. And here's where the next chapter starts, because Amsterdam wasn't the final stop. The Dutch model jumped borders. By the late 1600s, England was in chaos. King James II had lost most of his domestic legitimacy. Parliament feared Catholic absolutism. A lot of English elites were ready to replace him if they could find someone with military credibility, Protestant credentials, and some kind of dynastic claim. They found that in William of Orange. William was a member of the House of Orange-Nassau, and already deeply shaped by Dutch political and financial thinking. He was also married to Mary, James II's Protestant daughter. In 1688, William crossed the Channel with an army in an event remembered as the Glorious Revolution. James fled. William and Mary became joint monarchs of England. William didn't just import himself. He imported a financial worldview. Under his reign, England adopted Dutch-style public finance. It created long-term government bonds. It treated national debt not as a shameful emergency, but as a managed instrument that could be openly sold. It established the Bank of England to stabilize state borrowing and payment systems. In other words, England copied the Dutch trick of using private capital markets to fund state power. War could now be financed not only through plunder and emergency levies, but through predictable bond sales to investors who expected interest. This was absolutely transformational for Britain's rise. It let the English state fight major wars, build a blue water navy, and expand an empire with financial depth behind it. But the Dutch influence didn't stop in London, it crossed the Atlantic. In 1624, the Dutch West India Company established New Amsterdam at the southern tip of Manhattan. The settlement was built as a commercial node, not a feudal castle. Contracts were enforced, credit circulated, traders from different backgrounds and languages interacted. Streets were laid out for commerce, warehouses, and docks. When the English seized the colony in 1664 and renamed it New York, they didn't bulldoze that system. They kept much of the Dutch commercial and legal DNA because it worked. Over time, that DNA fed directly into how New York evolved, as a finance-driven, trade-driven, contract-driven hub. The corporate legal habits, credit structures, and commercial norms that started in Amsterdam and ran through Batavia also flowed into London and then quietly into Manhattan. And that's one of the reasons New York eventually emerged as a world financial center. It inherited institutional reflexes bred in the Dutch world. Meanwhile, back in the Netherlands, this tight web of capital, military reach, and family influence began to strain. The VOC's model carried incredible fixed costs. You had to maintain forts on the other side of the world. You had to defend long supply chains from rivals, pirates, and local uprisings. You had to pay soldiers and sailors in places where disease alone could wipe out crews. You had to fight off new challengers, especially the British and the French, who were building their own East India companies and navies. By the 18th century, corruption inside the VOC grew. Some regional governors acted like independent princes and siphoned off profits. Decision-making slowed. Internal factions pulled in different directions. Military expenses ballooned. Global trade itself was changing. Competitors were getting leaner and faster. The monopoly model that had once worked so well for spices in the early 1600s didn't adapt smoothly to the 18th century world. By the 1790s, the VOC that once felt unstoppable was hollowed out. The Dutch state stepped in. The government essentially nationalized and then wound down the company, absorbing its debts and assets. The VOC's original charter, which had granted it a 21-year monopoly in Asia back in 1602, had been renewed multiple times, stretched, patched, and carried forward for almost 2 centuries. Eventually, it expired. The company that had once acted like a private empire was dissolved. Its corporate body died, but its skeleton lived on. And that skeleton still moves. The Netherlands today is no longer a naval superpower projecting cannons across the Indian Ocean. But it is absolutely a financial powerhouse that punches far above its population size. Dutch structures for capital allocation, tax planning, treaty networks, holding companies, and cross-border investment vehicles now influence boardrooms and balance sheets worldwide. Dutch outbound holdings abroad sit in the trillions. Dutch inbound investment flows are enormous. Corporate groups with Dutch legal DNA, from energy giants like Royal Dutch Shell to massive financial institutions like ING Group, operate on a global scale. Shell in particular is a clear descendant of the VOC mindset, a company with deep resource extraction interests and worldwide reach that carries not only financial weight but also political leverage. Even the Royal in Royal Dutch Shell says something. It reflects the historical intertwining of Dutch corporate power with Dutch royal branding. The modern Dutch monarchy is constitutional and largely ceremonial, but the House of Orange-Nassau is still present, still wealthy, still networked into energy, defense, logistics, and corporate governance. The crowns today might be symbolic, but the influence is not. So, what exactly did the Dutch create? They did not invent the idea of profit. They did not invent sea trade. Those existed long before. What they created was an exportable template for scaling power with capital. They formalized a system where thousands of ordinary investors could pool money, convert that money into ships and soldiers, project force across oceans, lock down supply chains, and then plug the proceeds back into more capital. They built a loop where markets fed empires and empires fed markets. They also built safeguards to make people comfortable participating in that loop. Permanent shares, transparent ledgers, standardized accounting, limited liability, transferable ownership, and a regulated exchange. That loop still runs. Today, when you buy stock in a multinational that sources materials in one country, processes them in another, lobbies in another, and lists its shares in yet another, you're living inside a structure first tested by the VOC. Of course, the story is not a clean hero tale. It is both blueprint and warning. The Dutch East India Company helped invent the modern corporation, modern public markets, and modern state-backed capitalism. It also carried out massacres, expropriated lands, enforced forced labor systems, manipulated local politics, and extracted wealth through violence. The House of Orange learned to turn capital into legitimacy and legitimacy into capital. That move let them survive in a shifting political landscape, but it also tied royal prestige to systems of exploitation overseas. The English state borrowed the Dutch model to build imperial finance. New York inherited Dutch commercial reflexes and grew into a financial capital. Those are the roots of today's global financial order. But embedded in those roots is a question that hasn't gone away. That question is simple to ask and hard to answer. If capital can now behave like a sovereign who is allowed to govern capital, the VOC could sign treaties, raise armies, and run colonies because a political body. The Dutch Republic explicitly gave it that authority. The Republic could, in theory, pull the charter. There was at least a formal mechanism of accountability, however imperfect. Today's global corporations also shape policy, influence law, write terms of access, and deploy private security, both physical and digital. They don't fly national flags in the same way, but they do control flows of energy, data, money, infrastructure, and even public discourse. The question, who rules when the crown is invisible, hasn't vanished. It just moved from the deck of a spice ship to the boardroom and the server rack. The arc that starts with Spanish expansion in 1580 and runs through the VOC's charter in 1602, through the seizure of Batavia in 1619, through the Glorious Revolution in 1688, through the founding of New Amsterdam in 1624 and its capture in 1664, through the VOC's decline in the late 1700s, and into the rise of firms like Royal Dutch Shell in the 20th century, is not random. It's a continuous experiment. The experiment asked, can you turn capital itself into an empire? The Dutch answer was yes. They proved that a relatively small nation, with limited farmland and a fragile political balance, could bend global trade routes, humble rival empires, and leave fingerprints on London, New York, and Jakarta by engineering institutions instead of just swinging swords. And that's why this story still matters, because the same core pattern repeats. A powerful entity says, let us operate across borders. Let us lock in exclusive access to key resources. Let us write our own rules of engagement. Let us limit our liability. Let us sell tiny slices of ourselves to the public so we can raise unimaginable pools of money. Let us move faster than any parliament. That's the VOC formula. That's also the modern multinational formula. The logo might have changed. The cargo might be data instead of nutmeg. The fleet might be server farms instead of galleons. But structurally, it's familiar. So, when we talk about capitalism today and we throw around names like Rockefeller, Rothschild, J.P. Morgan, Bezos, Musk, or whoever sits on top of the rankings this quarter, we're actually walking through a house built earlier, long before Wall Street was Wall Street, long before London's bond markets ruled the 19th century, long before New York became a global clearinghouse for capital. There was Amsterdam. There was Batavia, there was New Amsterdam. There was the House of Orange standing in the background, making sure the machine kept running. And at the center of that machine was the VOC, the corporation that behaved like a country and taught countries to behave like corporations. If you're still here, you've seen how all the pieces fit together: war, trade, finance, dynasty, law, logistics, brutality, innovation. You've seen why the VOC wasn't just a trading company, but a prototype for the modern world, and why the Dutch House of Orange wasn't just a royal family, but a political investor class that learned to turn influence into capital, and capital back into influence. You've seen how Dutch financial engineering traveled to England, then to New York, and then radiated outward into the systems that run global markets right now. You've also seen the cost: massacres, forced labor, dispossession, and entire regions bent toward European profit. That cost isn't a historical footnote. It is written into the foundations of modern capitalism. Which leaves us with one last thought. The Netherlands no longer commands fleets the way it did in the 17th century. Amsterdam is no longer dispatching armed convoys to seize spice islands. Batavia is now Jakarta. Indonesia is independent. And global empires based on direct colonial rule have largely broken apart. But Dutch capital is still everywhere. Dutch legal frameworks still shape multinational giants. Dutch corporate DNA still lives in energy, finance, logistics, agriculture, tech. The House of Orange still exists. The royal crown today is mostly ceremonial, but the networks attached to that crown still touch boardrooms. The VOC is gone, dissolved, nationalized, absorbed into history. Its ships are long rotted. Its forts have changed hands. Its paperwork is in archives. But the core architecture it built is still online and still running. And that brings us back to the real unresolved question of the story. If markets have taken over the role once held by monarchs, who exactly is the monarch now?